Hello everyone, warm welcome to Testbook Super Coaching Regulatory Bodies YouTube channel. My name is Madhav Sir. I welcome you all in a very important session which is in a series Basics of Finance. See, whenever we prepare for regulatory body exams, you need to keep this point in your mind that for regulatory body exams, whether it is RBI, SEBI or NABARD, SIDBI, all these regulatory bodies, they are financial institutes. And if you're preparing for these examinations, it is impossible to clear this exam without having a good knowledge, at least of the basics of finance part. What I mean with the term basics of finance, it basically means all the important financial terms which are in news these days, which are related to all these financial institutes. You must have clarity of these terms so that you can understand the news pretty well. You can attempt your questions in phase 1, phase 2, and most importantly in the interview. It is impossible to clear your interview if you don't have clarity on the basic concepts related to finance. So let's begin the discussion without any further delay. But I would request everyone, do reply in the comment section that I'm audible, visible, everything is fine. We are good to go so that we can begin the discussion without any further ado. What we are going to cover today is, so we are going to start with a very important topic, that is ARC. The question is, so what does this ARC stands for? ARC stands for Asset Reconstruction Company. I repeat, it stands for Asset Reconstruction Company. But the question over here is, sir, actually what is the meaning of Asset Reconstruction Company? What was the need of introducing these types of companies? Which organization is responsible to regulate ARCs, and most importantly, how many important ARCs are operating in the country? If you have all these doubts, I will be answering all your doubts in this session itself. So let's get started. I'll start my discussion with the first term, that is Asset Reconstruction Company. Before I make you this point clear that basically what is Asset Reconstruction Company, I'll take an example, and with the help of an example, I would try to explain this particular concept, and I think you're going to enjoy this. And I think you are going to enjoy the discussion for sure. Let's get started, guys. May I have yes sir in the comment section, please? Let's get started. May I have yes sir in the comment section, please? Shall we begin the discussion? Okay, let's begin the discussion without any further ado. See, whenever a loan is declared as NPA, what is NPA? So it basically means non-performing asset. Non-performing asset means a loan given by the bank if the loan given by the bank is not performing. So what do you understand by the term non-performing? Non-performing basically means if you have given a loan, you are a bank or any other financial institutes, and if against this loan you are not receiving either principal or interest or both for 90 days, then after 90 days of non-receiving principal, interest or both situation, loan will be declared as NPA. The moment loan is declared as NPA, it means now bank should buckle up because the loan has been declared as non-performing, and there are pretty less chances that bank will be receiving its funds in the near future. So in that particular case, bank will obviously try to convince the customer. Bank will obviously try its level best to make the customer understand that if you are not going to pay back the loan, it is going to hamper your CIBIL score or your credit rating, the term which I discussed in my previous sessions. Now, let's suppose the customer is not convinced, then what next bank will do? So next bank will initiate the process of recovery. Bank will initiate the process of recovery. Earlier, the process of recovery was quite different because earlier bank supposed to reach to the judiciary, and once the judicial system approved the bank, then only recovery can be done. But after the introduction of SARFAESI Act, now banks they possess this power that they can issue the legal notice on the name of the customer and they can start the process of recovery. Even after the introduction of SARFAESI Act, which was actually introduced to speed up the process of recovery, still the process of recovery procedure is quite lengthy in terms of time. And if bank is not able to complete the process of recovery for upcoming few years, that means bank is losing every day. How come bank is losing every day? So bank has already given the principal, and on that principal bank is adding the interest which is to be paid, or I would say the lending rate which is ought to be paid by the customer. But if customer is not paying this lending rate, that will be start accumulating in the customer's liability side, and it will become huge and huge over the period of time. In this situation, if bank starts the recovery procedure where bank can use the SARFAESI Act, where we have securitization and reconstruction of financial asset and enforcement of security interest. Even bank possess the new tribunals like DPT, DRT, Debt Recovery Tribunal, as well as Lok Adalat. Still, the entire process is bit lengthy even after the introduction of SARFAESI Act. So, if bank keeps on waiting and banks itself get into the process of recovery, that will cost in two forms. First, bank will be wasting or bank will be utilizing its resources. For example, some of the officers will be assigned to complete the process of recovery, then n number of operational work will be done, and many other things, many other expenditures will be done by the bank. That is the resource which are going to be spent or which are going to be utilized by the bank. First thing. Second, not only this part that bank has not received the principal and the interest or lending rate is keep on adding. The next part is, if bank would have received this fund today, then bank can lend that fund today to a new customer to earn the profit. To the new customer to earn the profit. So on one side, bank is spending the resources, and on the other side, bank is losing. On the other side, bank is losing the profit which bank can easily earn from the same amount. I'll give you an example on this. I think now it's fine. I'll give you an example on this. What example I'm trying to discuss over here is, please pay attention. Let's take a new slide and let's come up with an example. What example actually I want to discuss, or let's do one thing. Just give me a second. Let's take an example to understand this point, what I'm trying to discuss with you. Please pay attention. I'll go with dates so that it will be much easier for you to understand. On 19th of September 2024, bank has given a loan of 10 lakh rupees. Loan of 10 lakh rupees. Okay. And exactly after 3 months, exactly after 90 days, the loan was declared as NPA. So 19th October, 19th November, 19th December. So on 19th December, the loan has been declared as NPA. So first installment was in October, second was in November, and the third installment was due on 19th of November. And if no installment is paid, the loan has been declared as NPA. Till now, bank outstanding value is 10 lakh rupees. And let's assume per month interest is 10,000 or per month lending rate is 10,000. So in last 3 months, what is the lending rate? So that is 30,000. Obviously, there will be a cumulative effect. Lending rate will be charged on the previous lending rate as well. I'm ignoring it just for your clarity, just for your understanding. Okay. Now, the loan has been declared as NPA. Now, bank will initiate the process of recovery. Bank will initiate the process of recovery, and bank will be following the SARFAESI Act. And in the SARFAESI Act, what bank is trying? So bank is trying to achieve or bank is trying to recover the loan. So in order to recover the loan, in order to one second. So bank is following the norms of SARFAESI Act, and in the case of SARFAESI Act, bank can go for first point, that is securitization, and second is bank can itself initiate the process of recovery without any further due. Now bank started the process of recovery, and the entire process of recovery took 5 years. I'm just assuming 5 years. After 5 years, bank was able to sell the asset which was given as security, which was mortgaged by the borrower, and now bank has recovered the amount. Let's suppose after 5 years, obviously if the customer is not paying and the security value was low, or let's say approximately equivalent or close to the 10 lakh value only, let's say the security value for this was 15 lakhs. And if I include the effect of inflation, then also the amount which was recovered after selling was 20 lakh rupees. After selling was 20 lakh. Got it? And in the last 5 years, or I would say 5 years plus 3 months, if I go with the simple interest wala calculation, if per month interest is 10,000, what will be the interest for 1 year? So that will be 12 into 10,000, which is 1,20,000. And for 5 years, it's going to be 6,30,000. We have already calculated. So bank was actually liable to get what amount? 10 lakh plus 6,30,000, that is 16,30,000, but bank has received 20 lakhs. You might be feeling that it is pretty good. Bank has recovered more than the value bank was seeking for it. Okay, understood. But in this case, you have missed one thing, that is in these 5 years, bank will be using its resources, employees, operations, going here and there, visiting, reaching to the DBT and many more. Let's take a overall cost of the resources as 3 lakh rupees. Then also 3 lakhs plus 16 lakh, 30,000, 1930, and bank has achieved 20 lakh rupees, which is a good amount. You might be thinking. But on the other side, think in another manner. Let's suppose the bank's loan was declared as NPA after 3 months, and now bank approached to a company, and the name of the company is X, and bank says the company X that, see, my loan has been declared as NPA. And the book value of the loan is 10 lakh plus 30,000 is the return. So I'm ready to sell this NPA to you. You will be the one who will be responsible to proceed the recovery. So in that particular case, what do this company do? So this company will be ready. Let's say this company is ready to purchase this NPA at a value of 10 lakhs only. And bank has lost what value? 30,000. Bank has lost just what value? That is 30,000. Good. On the other side, so this company's core role is to recover the assets. So this company will be recovering the asset, and let's say after 5 years, this company recovers, let's say 20 lakh rupees. So if the company has recovered 20 lakh rupees, the company has earned 10 lakh rupees of profit, because this company's major or the core role is only the recovery part. This is the situation of the company which has purchased the loan. It is in profit. Secondly, if I talk about bank, so bank has received the amount. And if bank has received the amount today, that is 10 lakhs, and bank has given that 10 lakh rupees again on loan for next 5 years, in those 5 years bank would have earned 6 lakh more. Bank would have earned 6 lakhs more. So in this case, bank has received the same amount as it was received over here, but benefit is bank time is saved, bank's resources are saved, and bank is focusing on its core operation of deposit and lending rather than getting into the process of recovery. But the point is, I have taken this example in a very cute manner, I would say, because if I borrow a loan and I know my loan amount is less than my security value, I will never ever try to NPA the loan. I will try to pay back the loan so that I should possess the value or asset with higher values. Generally, NPA cases, not always, but generally NPA cases happen not with the secured loans, but they happen with the unsecured loan, or we can say that partially secured loan. Let's suppose you have borrowed a loan of 10 lakhs against 10 lakh only, then in that particular case, bank will not be able to recover and bank will witness a loss. So there is a situation, very optimistic, bank will be at par, and there is a situation which is majorly witnessed that bank will be at loss. So if you are a bank, what you will think or what you will do, whether you will get into this process or this part is easy for you, sell the NPA to a company, the company will be completing the process of recovery, you take those funds, involve yourself in the lending again and start the process of earning once again. Tell me in the comment section what you will do. Tell me in the comment section, guys, what you will do. Tell me in the comment section what you will do. Sir, obviously we'll go with this. Obviously we will go with this yellow color method, because in the yellow color method, bank is at profit, ARC is at profit, and bank is majorly involved in its core operations. Bank is majorly involved in its core operations rather than operating itself, rather than involving itself in the process of recovery. Now, sir, this company which I have marked over here, that is company X. What is this company? So this company is termed as ARC. This company is termed as ARC. So basically, what is ARC? Asset Reconstruction Company is basically a company which is responsible to purchase, banks NPA, generally on the book value. I will be discussing what is book value for sure, generally on the book value, and the moment this company purchases the NPA from the bank, then it will initiate the process of recovery, and its core operation is to recover the loan or recover the NPA which they have purchased either from banks or other financial institutions. Now you must be shocked to know, for those who have not attended my previous sessions, the company that is ARC is set up under Section 3 of SARFAESI Act 2002. So what is SARFAESI Act? So SARFAESI Act comes up with 3 formats. The first format is securitization, which means if you have given a loan to a company, rather than getting into the process of recovery, you can convert your loan into security. That means you can convert your loan into the equity of the company and you can sell those equity shares in the market to recover the funds. This is ESI, which says judicial involvement has been abolished and now bank can initiate the process of recovery, and bank can approach to Lok Adalat, DRT, Debt Recovery Tribunal, or DRAT. These are the, I would say, specific courts which have been set up to handle or to clear the NPA related cases in a high pace or in a speedy manner in comparison to the general judicial system. But you missed one thing, that is asset reconstruction, securitization and reconstruction of financial asset. Reconstruction of financial assets. So in SARFAESI, SARFAESI, what is this RFA stands for? Sir, it stands for reconstruction of financial asset, and reconstruction of financial asset means rather than bank or financial institutes itself getting into the process of recovery, it's better you sell your NPAs to the specific companies which are responsible to do the same, and that process of selling the NPAs to the ARCs or to the Asset Reconstruction Company is mentioned and applicable under SARFAESI Act 2002. Is it clear? Is it clear, everyone? So next time if someone asks you, what is ARC, then what will be your answer to their question? So the answer to their question will be very simple and very easy. I'll give you that answer. It says ARC, that is Asset Reconstruction Company, is a special type of Asset Reconstruction Company is a special type of institutions that buy debtors, debtors of the bank at a mutually agreed value and attempt to recover the debts or associated securities by itself. So any company which is going to recover your NPAs by itself and paying you in advance so that you can continue with your core process, that is known as ARC. Sir, they are regulated under RBI. They are regulated by RBI and they are set up under the SARFAESI Act 2002, to be very specific, under Section 3 of SARFAESI Act 2002. Got it, guys? Understanding my point? May I have a reply please in the comment section so that I can get to know you are understanding what I'm trying to discuss. May I have a reply please? Okay, now let's move on to the next point. The next point says, sir, what is the process of asset reconstruction done by the ARC? So the main intention of acquiring the NPA is ultimately realize the debts owed by them. So basically, process is banks, they will be selling their NPAs to the ARCs, and the ARCs, they have different options. First option is they can take over the company, change the management and run the company. Change or take over the management and run the company so that you can bring the company into profit and you can recover your loan. Second is you can sell or lease such businesses so that you can earn the profit or you can earn the return. Third could be you can reschedule the payment of debt, offering alternative schemes and arrangements so that you can receive the funds. And lastly is you can enforce the security interest, means you can enforce the process of recovery under SARFAESI Act. That means you will be taking the possession of the asset and then you will be selling that asset in order to earn profit. And even you can go for securitization. That means you are converting your debt into shares. So all these, I would say, steps can be followed by bank as well. Bank is capable. For that matter, every financial institute is capable to take all these steps and to achieve or to recover their loan, but it is time consuming, resource consuming, and end of the day, bank is getting distracted from its actual operation, that is lending and borrowing. So ARCs were introduced in order to ease the process of recovery by the financial institutes. Now, on the behalf of financial institutes, ARCs will be purchasing the NPAs of the banks and financial institutes and getting into the process of recovery. Bank will sell their NPA. They will get an amount that could be equal to the NPA, that could be less than to the NPA value, that could be book value, that could be actual value. That depends. That depends on their mutual understanding. That depends on the process through which the acquiring of the NPA is done. Got it? Now, the next point is, when we talk about ARCs, sir, do we have any ARC which is owned by government or government institutions? Then there are two organizations which were in news recently. The first one is NARCL. NARCL stands for, anyone can give me the full form in the comment section? NARCL, sir, it is National Asset Reconstruction Company Limited. So it was incorporated, it was set up under the Companies Act, and it is registered with RBI, and it has a license of ARC, that is Asset Reconstruction Company. It has been set up by banks to aggregate and consolidate the stressed asset for the upcoming years to go. In this particular organization, public sector banks, that means government owned banks, they maintain an ownership of 51%. They maintain an ownership of how much percent? That is 51%. Now, moving to the next organization, which is related to the same. The next organization is India Debt Resolution Company Limited. What is it? Sir, it is a service company or operational entity which will manage the asset and engage market professionals and turnaround experts. So existing ARCs which are operating in the country, they all are regulated by RBI, but NARCL is basically responsible, or NARCL is basically a asset reconstruction company, and this asset reconstruction company is owned by, or its majority stakes are owned by government owned banks. So we can say that it is indirectly government entity, and this NARCL has been set up to initiate or to speed up the recovery of bank NPAs. Along with NARCL, we have one more organization, that is India Debt Resolution Company, and this is basically a service company, or it is basically an operational entity which is going to manage the asset, as well as it will engage the market professionals so that the process of recovery can be done. Or if you are taking over the management, then you can run the business well, or if you are converting the loan into shares, then securitization could be done. That process is done by IDRCL. So they work hand in hand. NARCL is the organization which is responsible for the recovery, but along with that we have IDRCL as well. Now, other companies which are operating in the country, the names are, first one we have Asset Reconstruction Company Limited, then we have SREC Limited, Reliance Asset Reconstruction Company Limited, which means ARCs are not only government owned, they can be privately owned as well. India SME Asset Reconstruction Company, which is looking forward for small and micro enterprises related asset reconstructions. International Asset Reconstruction Company Private Limited. These all companies are operating. These all companies are operating in India under the banner of Asset Reconstruction Company. Got it? Now, if ARC is clear, again I say, what is it? Sir, it is basic. So if the basic of ARC is clear, now I'll move ahead. I would be discussing few questions with you, which will give you more clarity and understanding that what type of question can be asked. First question says, in the previous session, sir, we have discussed capital adequacy ratio. In the previous session, sir, we have discussed capital adequacy ratio. This is the ratio of capital reserves or reserves out of the capital maintained by bank against its risk-weighted asset. And we know that in India, scheduled commercial banks are asked to maintain bare minimum ratio of 9%. I hope you remember that. Now, if I talk about ARC, Asset Reconstruction Company, sir, what is this company? So this company is purchasing the NPAs from the banks, financial institutes, and taking up the recovery. But ARCs, they are also funded by the investors. In order to safeguard the investors, ARCs are also asked to maintain what? Capital adequacy ratio. But you are already dealing with the NPAs. Your probability of loss is much higher than that of banks, and due to which the ratio which is ought to be maintained, CAR ratio which is ought to be maintained by ARCs is 15%. So according to this, the answer to this particular question is, sir, if banks are maintaining 9%, RBI has asked the ARCs to maintain a capital adequacy ratio of what percent? So that is 15%. So this is the solution I have. You can go through with the solution when you will get the PDF from my Telegram channel. Moving to the next question, I hope you will give me the answer. So what is the ownership of public sector banks in NARCL, which is recently set up by the government or government entities? Then we have made this point very clear that bare minimum, public sector banks will be holding 51% of shares in NARCL, that is National Asset Reconstruction Company Limited. So these were the two questions, or these are the two types of questions which can be asked in your exam, and this is how you learn step by step. If you say that I have given you 100% of ARC, no, not at all. So why you have not given us 100% of ARC today? There is a reason. The reason is, if I would discuss these financial topics in much detail and I'll take a class of an hour or two, you will not be able to relate with me. It's better, let's first cover the topics with basic understanding, like you have a basic understanding of ARC today. Now try to find out n number of content over the Google on ARC. Once you'll start reading, you will find n number of new terms, and if you want the answers to all those n number of new terms, I will be coming up with an advanced series as well. So today I'm going with basics of finance, then I'll change the name of the series. I'll say Finance Advanced Series or Advanced Series of Finance. I'll name it somehow like this. But if you want to cover all these topics with appropriate content, updated content, with quiz, with descriptive practice, then you should enroll in our RBI Grade B 2025 batch, which is Lakshya batch, and use code Madhav in order to enjoy maximum discount. So sale is going on. You can start your enrollment today in order to secure or in order to complete or achieve your target to be an RBI Grade B officer. Thank you so much for the time. But if you want to cover a very important topic, that is after ARCs, we have many other topics related to the banking sector or financial world. The next topic is Basel norms, one of the favorite and most watched topic, or I would say the candidates are very afraid of this. Why the candidates are afraid? Because they have never understood Basel norms, or they have never understood the basics of Basel norms. Let's first understand the basics of Basel norms today, where at 9 p.m. I will be discussing the basics of Basel norm, not the entire Basel norm, but I will be setting a foundation for you so that you can read more on Basel norms on the Testbook application. So don't forget to join my free masterclass today at 9 p.m. on Basel norms, where you'll get the entire understanding of a topic that is Basel norm. We'll talk about 1, 2, 3, all three Basel norms, but keep in mind basic level. The next series will be advanced level, then we'll go to ultra advanced, so that I can build your concepts day by day and you can learn the things in a better manner, you can retain them better, and you can have a clarity of all these concepts so that you can get yourself comfortable with the daily financial newspapers. Thank you so much for joining, guys. We'll catch you in the next session. Till then, stay home, stay safe, guys, and do catch me at 9 p.m. on Testbook application masterclass in regulatory bodies, which will be on a topic Basel norms. Thank you so much. Good luck.